Good morning, everyone. It's Stephen Whiteside here from the uptrend.com with your morning market outlook for Tuesday, February 17th, 2026. In the pre-market this morning, stock index futures, gold are down in the pre-market while crude oil is up a dollar and Bitcoin is flat on Tuesday morning. So not a lot of excitement. You can see there's a little more weakness in the tech sector than the rest of the market. Now, when we look at these pre-market numbers, it's important to remember what the average true range is for the different indices. And if we just use the Dow as an example, the average true range is currently 662.27. And if we show up in the pre-market and see that we're trading up or down over that level, we know that something is really, really broken in the market. Otherwise, if it's trading below that level, we know that it's just an average day in the market. Let's move on to a couple of weekly charts, and then we'll take a closer look at the U.S. market, and we'll follow that up with a look at the Canadian market. Now, on the weekend, we posted a weekly sell signal for the NASDAQ 100. And so what's been happening on a daily basis has finally clicked in, and we're on a weekly sell signal. We are negative for the year for the NASDAQ 100 for 2026. Now, the previous week, we did trade through the lower channel line, but we did not close below it. And so finally, we closed below it on Friday. Now, of course, everybody's talking about the weakness in the software sector of the NASDAQ. And the software sector rolled over back in October, and that also helped put some weakness into the Canadian tech sector, which certainly does not have a big hardware or AI component to it. So we've been seeing Shopify help take down the Canadian tech sector over the past couple of months. Now, while money was coming out of the tech sector, it might have been going into the bond market. The TLT is back on a weekly buy signal as of Friday's close. Now, moving on to the VIX or the Fear Index, we can see options traders in Chicago are still nervous about the market, and the VIX for the S&P 500, the Nasdaq, and the Russell 2000 continue to trend higher. That is bearish for the stock market. Moving on to the U.S. market and looking at the major index ETFs, we've got the Dow trading through the lower channel line on Friday, but did not close below it, unlike the S&P 500, which is back on a sell signal. Now, right now, there's a huge difference between the S&P 500 and the equal-weighted S&P 500, which made a new high on Thursday. And then we had basically an inside day on Friday. Compare that to the NASDAQ 100 versus the equal-weighted NASDAQ 100, which has been on a sell signal for a few weeks now. We've also got the next generation NASDAQ on its second day of a sell signal, so no joy there. Put in a lower high. Now we'll have to see if we put in a lower low. You can see that we had a buy signal. It only lasted a couple of days, and during that period, the pros did not come back to take control. So typically, when we take a buy signal after a couple of days, if you don't see the pros come back in to take control, you have to just realize that trade is going to fade away fairly quickly. Looking at semiconductors, looks like we may be putting in a double top here. Then looking at the financial sector, we made a new low for this move on Friday. And you can see that while we did get a buy signal here, that lasted just a couple of days. During that period, the pros did not come back to take control. And it's not necessarily the banks that have been pulling down the financial sector. It has a lot more to do with the broker dealers and now the insurance sector. So it has not been the banks pulling the financials down. It has been the broker dealers. Now, what worked and what didn't work on Friday? Well, utilities were the big winners. What didn't work? Communication services. So there's utilities running back up towards the high from last October. At the same time, we've got communication services coming down, looking to see if it can hold the January lows. Looking at the most actives from Friday's trading action, starting off with NVIDIA. NVIDIA dipped below the lower channel line on Friday, but did not close below it. So 193.75 still acting as major resistance for NVIDIA. Then looking at Ford struggling here to get out above the 1445 level. And then looking at Fastly gapped higher on Thursday morning, continued to move higher on Friday. Not a stock I've really spent much time looking at. It looks like it came down to $8, found support, filled the gap from back in early November, and then just quickly reversed. So too fast for me. Then Transocean making a new high on Friday. No joy for Lloyd's Bank. It's still on a sell signal here. No joy for Intel, still on a sell signal. Then we've got Amazon. Amazon struggling around the $200 level. We actually closed below it on Friday, so we may be moving away from 200 over the next few days. And then Apple came down hard on Thursday, continued to move lower on Friday. Then last up, looking at Snap. Snap had a quiet day on Friday, inside day. We're right down at the 469 level. That's the bottom of our projected trading range on the daily charts. On the weekly charts, if we break 469, then 313 would be our next target to the downside for Snap. Let's finish off this morning's presentation, taking a look at the Canadian market, and both the iShares for the TSX 60 and the Vanguard Canada ETF bounced off the lower channel line on Friday. So a close below Friday's low on Tuesday would give us a sell signal. Inside day for the energy sector on Friday. We had the financials and the bank stocks both trade below the lower channel line, but they did not close below it. So they're looking a little weak here, a little tired, but we're still on a buy signal coming into Tuesday's trading action. Inside day for the global gold ETF, and then an inside day for tech stocks on Friday. Now, what worked on Friday? Materials, which of course includes the gold stocks, was the winner. Communication services was the only loser, just by 1/3%, so no big deal there. The materials sector looks like this, had an inside day on Friday. The telecom sector looks like this. It pulled back a little on Friday. We seem to be stuck here at the 162.50 level. That's where we topped out back in November. If we go and look at the weekly chart, you can see that back in the fall of 2024, we were up at the 168.75 level. And so it's certainly possible that that could be our next target to the upside on the weekly charts. Looking at the TSX most actives, Enbridge had a huge day on Friday, up 3.79%. No joy for TELUS, second day of a sell signal there. Inside day on Friday for Manulife. And then Allied Properties, which gapped lower on Wednesday, continued to move lower on Thursday. Friday was an inside day. Inside day for Synovus, and so you can tell Friday was a pretty quiet day when you've got all these inside days. There's B2 Gold having an inside day, having trouble breaking out above 781, and that is a lower high that we put in on Wednesday. We'll have to see if that holds us in check, or if we are able to break out above the 781 level. Barrick has been trading in the channel for the past couple of days. So on Tuesday, we're looking for a close above $65.49 to give us a buy signal. Inside day for Baytech on Friday. And then we've got the Royal Bank, second day of a sell signal there, had trouble breaking out above 237.50. If we can go back and take out the recent high, then 250 would certainly come into play. But the high on Wednesday was actually lower than the high that we saw in late December. Okay, folks, that's all for this morning's presentation. So far, it looks like we are going to see a little selling on Tuesday morning. Have a great day. Next time you'll hear my voice is on Wednesday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theyuptrend.com.